Hi, it's Lee, and welcome to the Tesla Economist. Megapacks right now seem to be a very hot topic for Tesla, since Tesla have opened their new Megapack factory in California with a capacity of 40 gigawatt hours a year. A lot of people saying these packs will essentially have unlimited demand, for lack of a better word, due to the fact that they're basically a return on investment for any customer who wants to buy one. They save money on energy. People are willing to spend money on things that save them money. And it all comes down to how much they save relatively. It may be something like a 25% return on investment, which is obviously outstanding, at least as Tesla's Megapack in South Australia is anything to go by. We're told that Tesla Energy will be growing much faster than the auto business too, which makes sense, as it's a relatively small part of the business when compared to auto sales and the amount of batteries it consumes. In fact, we're told it will grow between 100 and 150% a year. However, if we look at the rate of growth already from Q2 2022, we had 1.1 gigawatt hours of energy deployed, and then in Q4, we were up to nearly 2.5 gigawatt hours. That is a 127% increase already, just over 2 quarters. So if we analyse the Q4 rate, we're at 10 gigawatt hours a year. Therefore, we're already at 1/4 the capacity of the new factory. Granted, some of that does also include Powerwalls. So if Tesla achieve 150% growth for the year with Megapacks, that would take the run rate to something like 25 gigawatt hours a year. So most likely this factory will hit full capacity sometime next year, perhaps around halfway through. But like I said, also we already saw a much larger increase in production in the second half of last year, so it might be even higher. But at an estimate, I would say that we're looking at around 35 gigawatt hours of Megapacks for next year. However, for this year, 25 gigawatt hours might seem possible, if we take the average selling price of a Megapack at $2 million, in case you're thinking that figure is low, as they actually sell for $2.6 million for a single Megapack, when you order multiple, the price quickly diminishes to under $2 million. It's difficult to estimate the quantity of Megapacks per order at this stage. And each Megapack has a 3.9 megawatt hour battery. Then if 25 gigawatt hours are produced, that would equate to around 6,400 Megapacks for the year, which at $2 million per pack would come to a revenue of $12.8 billion. Okay, perhaps just a small fraction of what Tesla's auto business does, but when at full capacity, this is going to be around $20 billion a year. The thing is, autos are now at around gross margins of just above 20%, at least excluding tax credits. As for Megapacks though, although this revenue may be about 1/5 of autos, the margins might be about twice as high. It's very likely Tesla can reach 40% margins on these Megapacks. I don't, however, think Megapacks will qualify for the sales subsidies too, like some people are speculating, as the sales currently come from China, which would have been a potential $35 per kilowatt hour. However, they should be able to get the battery subsidy, which is still $10 a kilowatt hour, which is going to be $400 million pure profit when at capacity, almost half as much as we receive from regulatory credits from autos. So if they can produce $12.8 billion in revenue this year, perhaps this year we could see around $5 billion in gross profit, and next year likely double that. Margins will likely increase as the factory hits capacity due to economies of scale, although it may mean the factory is perhaps just at 30% gross margin this year, and perhaps not at 40% until next year. But at a guess, even at the current capacity, it looks like they're close to 20% just for the Megapacks. Tesla is still filling orders from the older Megapacks, and the prices have increased since then. Then there's the potential of another Megapack factory, perhaps in Europe or somewhere. This business can really start to make a difference to Tesla's financials. Even if Tesla ever gets hit by a severe recession, then Megapacks should likely be able to support the company financially without even having to dip into the substantial cash reserves. The energy business really is a big jump in diversification for the company, and really does start to remove the label of Tesla being just a car company. One of the major cost savings for the Megapacks is the fact that Tesla are now using LFP cells instead of 2170 cells. This will save about 20% or so of the cost of the cells, which all goes to profit. One would think that this new factory would make manufacturing that much more efficient and thus save costs significantly there too. Elon tells us many times that Tesla's core strength will end up being in manufacturing, and it sounds axiomatic. I appreciate how eloquently Elon explains how detrimental manufacturing is to Tesla, the better they are at it. Then simply the lower cost the production can become, along with increased speeds in production. In other words, more supply at lower costs, which in turn means higher demand. The lower the cost Tesla can get these Megapacks, then if the savings are passed on to the end user, it simply becomes a better return on investment for anyone purchasing Megapacks, and thus more feasible for more customers for more applications. Basically, the Megapack is a money-saving product. It means you can store energy when it costs less and use the stored energy when energy prices are high. It acts as a buffer for peak demand. Anyone with such energy storage can thus use the energy when it was at a lower off-rate cost. Alternatively, it could be sold back into the grid at a higher rate and could end up earning money. That is the value of energy storage. If a Megapack ends up saving or generating as much as $4 million a year in energy for a customer, and it costs $20 million, then that is a return of 20% a year, which is amazing. And the product will last for a long time due to the fact LFP cells can go for so many charging cycles. It sounds like Tesla do have enough supply from CATL to ramp up this factory. However, from there, I'm uncertain as to where Tesla will source additional LFP cells. CATL are building a massive new factory in Shanghai. This is quite an exciting development, but we are uncertain as to whether they will be supplying Tesla or how much. But it is supposed to have a capacity of 100 gigawatt hours a year. However, they may be producing their new M3P cells there, which are more suitable for vehicles. But I'm not even sure that matters either. It sounds possible that Tesla may end up using 4680 cells for energy anyway, which means they are even lower cost than LFP, and Tesla get to take full advantage of the subsidies of $45 per kilowatt hour for each battery they produce. But when will Tesla start making their own in-house LFP cells? This is the big question. Elon even talking about 2/3 of electric vehicles will have batteries with iron-based cathodes. But LFP is not without its disadvantages when it comes to vehicles, due to them being less energy dense and thus reducing the range of the electric vehicles. LFP is, however, great for energy storage, as it has lower energy density, it's a safer battery, and thus less likely to catch fire. Despite its lower energy density and thus heavier weight, it's irrelevant if it's stationary. The other advantage is that LFP can be produced at a much larger scale. Again, due to the lower energy density and thus less refined lithium, it is easier a manufacturing process, which also results in the biggest advantage that it costs less than nickel cells. There is a disadvantage though. LFP does not perform as efficient in colder climates as they lose capacity. Of course, we're referring to the coldest parts of the year in said climates too, as that is when energy storage is likely the most necessary. So it would be about the actual battery capacity a Megapack has at the coldest time of the year. Therefore, it's possible that Megapack's target market might be warmer climates that use solar, which makes sense as Megapacks are a great way to store the energy solar produces. In these markets, Megapacks will simply be more valuable, especially if they also have higher costs of power. For example, in Hawaii, electricity is expensive. I remember when I stayed in an Airbnb in Kauai, and it didn't even have air conditioning due to the cost. However, Tesla actually do have a Megapack in Kauai. It's simply a better return on investment in such markets. Places where there's a lot of sun, suitable for solar and not too cold a winter, and where power is expensive. Australia is another ideal location, and roof solar is very popular there too. Basically, there'll be some markets where Megapacks provide a much higher return on investment. In fact, likely any island in warmer climates would majorly benefit from solar and energy storage. Thus, there should be ample demand for some time. In fact, we're told that there is still a backlog of about 2 years currently. Of course, Tesla Solar would be a great complement to Megapacks, but we've not seen much expansion on that side of the business. For example, in 2018, Tesla deployed 326 megawatts of solar and 348 megawatts in 2022. Elon says he needs to concentrate on the auto business first rather than solar, but obviously solar has major opportunities and is a crucial part of the mission. Also, like we're saying, these are a return on investment product. It might even mean that Tesla vertically integrate and simply set up their own solar farms with Megapacks and become a power company. Perhaps set up in the Mojave Desert or somewhere where there's a lot of sun. Anyway, the lower Tesla can reduce the cost of these packs, then the better the return. Like we said, they're currently using LFP cells, which are probably around $100 a kilowatt hour. But if Tesla moves to 4680 cells, then Elon says they can get them down to $70 a kilowatt hour. And the additional $35 a kilowatt hour subsidy, well, that's when it starts to get crazy. And including the $10 kilowatt hour battery subsidy, we're talking about $25 a kilowatt hour cost of cell. With a 40 gigawatt hour a year capacity, that is an additional saving of $3 billion a year. Pure profit. But then the crazy thing is, 4680 cells have nickel-based cathodes. What happens when Tesla make their own in-house LFP cells? If they can save an additional $25 per kilowatt hour, then that means the cells literally cost nothing to Tesla when you include those subsidies. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.